Well, Scott, first I've got a bone to pick with all the bulls who told me repeatedly that the rate hikes are already in the market. They're priced in. Yet Brainerd comes out and says yesterday, hey, look, we're going to go to 50. We can start paring back the balance sheet. And that news that was supposedly in the market, I guess it wasn't, because we're down 5% in 2 days on the NASDAQ, with the S&P following, with the Dow following, et cetera. So it's not a game changer for me, but maybe it'll be a game changer for them. I don't know why it's such a foreign thought that bear markets could last for more than a month or two. And I believe that's what we're in. So actually, it upped my cautiousness on the market because I think that most are not prepared for a tightening cycle. And yes, the Fed could put us in recession. It's very likely, an outcome according to a lot of strategists. But I keep focusing on this quarter, and despite having companies that have reported good earnings, like a Micron, very good earnings, they're short-lived in terms of the celebratory trading going higher. So Micron now is down about 10% from where it was when it reported, even a little more. So yes, I think this is time to be in cash. I think it's time to be cautious. I don't think it's worth selling long-term positions where you have a heavy tax burden if you do get out of it, but it's not the time to put new positions on.
I mean, you see the NASDAQ, we could show it again. Yesterday was ugly, and today is getting uglier. You've got the first back-to-back, you've got back-to-back declines in big ones, not the first, for ARK, the ARKK, down 5% yesterday, down more than 6% today. There's a 327-point decline for the NASDAQ. And, it's hard to overstate it. I mean, Brainerd Super Dove turning into what sounded like Super Hawk. And if you missed it, it was Brainerd talking about a faster pace of QT, even faster than last time. And that spooked the market yesterday. Kramer now says today, this morning, quote, the time to be more conservative is now. He says he's been paring back exposure for the club, maybe the most aggressive pare back, he says, in a decade. Lee Cooperman was on with me in overtime yesterday, says he's taken his long exposure down to 68%. Remember, he was a fully invested bear. Now he's a less fully invested bear. Let's listen to what Cooperman told me.
I don't think we'll have a recession in 2022, but I think there's a chance we can have a recession in 2023. And recessions typically are preceded by bear markets. And you're seeing a lot of the market now, home builders and the banks and credit-sensitive stocks acting very poorly. So I think it's a time for caution.
Right. A lot of those cyclical areas, Joe, not acting good. Chips leading us down. Housing's no good. Auto stocks have been hit. You weren't as cautious as you are now just a few days ago. Brainerd had an impact on you.
Of course. I said on Monday the growth trade is back on again. I said on Monday there was further upside potential for the S&P. Steve's right. The hawkishness from Brainerd was not priced into the market. We are now pricing in something that we don't know. Is it going to be balance sheet tightening that is passive? Is it predictable? What's the amount going to be? Am I going to get a target from the Federal Reserve? Am I going to get timing? So clearly, we have an adversarial Federal Reserve. We've had the adversarial Federal Reserve for the last couple of months. They are clearly intent on utilizing wealth destruction as a weapon to cool demand and to affect inflationary pressures. That's real and that's present. That's been with us now for the better part of 2022. And I keep hearing, well, the bulls or the bears. Guess what, Scott? Everyone, raise your hand if you're losing money this year. Unless you are a pure commodities trader or you're an individual on Twitter that is day trading and telling you how great you're doing, this is as challenged an environment as you are going to find, whether you are an investor or a trader. You're in the ring with Mike Tyson in 2022. And when you're in the ring with Mike Tyson, you're just trying not to get knocked out. So caution has prevailed at the beginning of the year. Caution is prevailing now. The new dynamic is something that wasn't priced into the market, and that is, without question, an adversarial Fed that went after stocks initially, and now they're going after real estate pricing and shelter inflation because that hasn't moderated.
Okay.